Shapiro, thanks very much. So how far should banks go to prevent a foreclosure? Shouldn't borrowers also bear some responsibility for doing the right thing?
So let's ask our Fox panel, including Terry Keenan from Fox News, Peter Schiff, author of Crash Proof, Fox Business contributor Charles Payne, and Gary Kaltbaum from GaryK.com, along with Joe Battipaglia of Stifel Nicholas. Joe, when you hear that one woman that Adam just interviewed talking about how a modification in her mortgage is now helping her actually hold on to the house, does this give you encouragement in thinking that this is the right path to follow?
Well, unfortunately, we have such large volume here that if you stabilize those in their homes, they will not be contributors to the economy prospectively because it will still be a heavy burden. In addition, the marketplace will not know what the true value of homes should be, so it arguably will take longer for prices to correctly adjust. And then lastly, the banks then must take even bigger write-offs along with their investors over the next 2 years, which creates more uncertainty for the credit markets.
Charles, Ben Bernanke was talking about equity today, the value that you have in a home. He says that we, the government, should do more to, quote, restore some equity for the homeowner. But a lot of these homeowners put no equity in it. They don't have a stake in their home because they didn't put any money down. So is he using the wrong word when he says restore equity because they didn't have any to begin with?
I think he probably should have used restore confidence or restore confidence in the system or the real estate market. Certainly restoring equity probably is the wrong word to use. But I sort of disagree a little bit with Joe is just saying. I think the banks, despite the fact who's at fault, who made a mistake, probably it's part self-preservation and part that confidence thing that Bernanke alluded to. They need to work with these borrowers right now to try to figure something out. Also, the banks have to know in the back of their mind that Congress is probably going to come out with some more plans, and probably at the end of the day they might get bailed out through the taxpayer one way or another.
Peter Schiff, what's the best idea here to fix this problem at the moment, and how much of a responsibility do the homeowners bear in this?
Well, I think the borrowers are actually in the driver's seat here. I mean, look what Bernanke admitted, that the recovery rates in foreclosure are less than 50 cents on the dollar. So that's a powerful incentive because the borrower can just say, I'm out of here. Here's my keys. And when the lenders are confronted with those realities, they're going to make a deal with these borrowers that maybe is better than getting 40 or 50 cents or less on the dollar. So I don't think they need any help. I think it's the lenders who need the help.
Well, and Terry, Bernanke's also talking about not only lowering interest, but lowering the principal on the house. And the question is, won't everybody want a lowering of their principal now?
Of course, and if you lower the principal on a house that's in trouble and on the verge of foreclosure, you're lowering the price of the whole neighborhood. There goes the neighborhood. And it boggles my mind that Ben Bernanke is using the term restore equity. It is the exact flip side, 180 degrees from what Alan Greenspan told everyone to do 3 years ago, which was equity extraction. Extract the equity out of your house. Go shopping, Go help the economy. Now, the government, we're supposed to now restore this equity?
Yeah, that's a good point. You extract equity and spend it, and then the government refills your piggy bank for you so you can do it again. But what this also shows is how much home prices have to fall. If lenders can only get back 50 cents on the dollar in a foreclosure, that means down payments need to be 50%.
Let's get Gary Kaltbaum in here, and then Joe, I'll let you get back into. Gary, when you look at the overall idea of a solution that might involve the government and the lenders, what is it?
Well, I think the solution is move to Sweden at this point in time. I got to tell you, I sat there. I'm in Orlando, and I'm watching Bernanke and I wasn't there where he was, but listening to what he says. And this proposal is just, I cannot believe what I am listening to. You're going to ask banks to give up money. Banks can't afford to give up money right now. They're losing their butts, and they don't even know where their earnings are. All this is more socialist policy to let government get in and do more. And all they've done is screw things up in the first place.
Joe,
Markets have to work this out over time.
I mean, we've got to challenge that here. Bernanke's not a socialist. But let's bring in Joe Battipaglia here, David.
Yeah, although I just wanted to say one thing, Joe, is that it's clear that what Bernanke was doing was involving himself in public policy. Is that out of step for a Fed leader?
He has made a dreadful error here because in the past, Alan Greenspan nuanced his comments so that there was something for Republicans and Democrats to fight over, not to assume that it's right. He has now basically taken the lid off of everything and said, raise the cap for lending from Fannie and Freddie, raise the cap for guarantees from HFA, and he used the right words. He, in effect, is saying give equity in the homes to the homeowner, which is to say, as example, if the house was worth $100 now and the guy owes $100, then give him $20,000 off to $80. He now has $20,000 in the game. That is socialism as plain as I can get it, because you're not only redistributing wealth, you're now giving other people's money away. And that's a sad state of affairs. And he has endorsed this, which gives congressmen like Barney Frank and senators like Chuck Schumer a chance to run for the roses here to redistribute more income.
And my main point,
I will say, Joe, to your point, this guy is considered either the most powerful or second most powerful man in the world. He's got to show
He can be replaced, Charles, and he should.
Some leadership, though, at some point in this sort of crisis.
That's not his job, Charles. His job is price stability. His job is price stability in the economy.
He got the job because he was going to speak to us,
and he screwed that up too.
One at a time.
We don't have price stability.
One at a time. All right,
my biggest
that's a whole
issue.
different topic.
We have a 15-second hard break, and you know what that means. We got to take a break. We'll be back with a lot more of our exciting discussion in a moment.
It's do or die for. You've got money in a savings account, maybe a CD. I'm sure a lot of you do. Do you need to be worried about the banking system at the moment?
Our Fox panel is back now to talk about it, including Nicole Ridgway from smartmoney.com. Now, Nicole, the head of the FDIC, is very careful with the words that she uses. She doesn't want to cause anybody to panic, certainly doesn't want to run on the bank. We already saw one in England. We don't want anything like that happening here. And to put it in perspective, the S&Ls, we had over 1,000 institutions closed down. We're nowhere near that right now.
Nowhere near that. And there are certain insurances put in place that'll make sure that, the average person saving money in their account, they're not going to lose it. There's insurance in place.
Terry, she just stressed the average, which is great.
Yeah.
But you already saw a pricey fund that you need several million to be in at Citigroup, where some people were getting the call saying, sorry, you can't take your money out for 6 weeks. Then it became at least a couple of months.
Yeah, and this Citigroup situation is worrisome. I mean, this was the world's biggest bank. It had the investors, some of the best investors in the world, Eddie Lampert, Prince Al-Walid, investing in it. Now, the sovereign funds of Abu Dhabi and Kuwait and the Prince saying they need more capital. I mean, this is a very serious situation. And I also think there's going to be massive layoffs at the bank. 300,000 people work at Citigroup, so it has huge ramifications for the rest of the economy as well.
It does.
Sure.
Peter?
Well, first of all, the banks are in some serious trouble because, they're in the business not only of lending money, but being paid back. And that's the important part of the whole deal there. You got to get paid back. And with these recovery rates as low as they are, they won't. But the losses, as far as bank failures, what the government is doing right now to prevent the failures, and they're still going to come, is inflicting real losses on depositors right now.
How?
Because the dollars that they have on deposit are losing value. And it doesn't matter if the bank fails and you have fewer dollars or you keep all your dollars, but it costs you twice as much to buy gasoline or to buy food because your money is losing purchasing power either way.
Gary Kaltbaum, when people call you up and say, buddy, listen, I know you're in on this money stuff, is my investment or my cash that I have parked in a CD or a money market, is that safe? What's your response to them?
I have actually had a few calls from people about money markets, and I tell them I've done my checking and don't think so. Now, look, as far as whether bank fails or not, I don't see it. There's all this talk, and whenever things go south for any industry, somehow the people come out of the woodwork saying the end of the world is coming. That's usually overrated. There are definite issues out there. I think Countrywide was going to go bankrupt before Bank of America took over. I think there's going to be some casualties, but overall I think we'll be in fine shape, and we won't be laughing about it 10 years from now, but we'll be looking back on it, and I think everything will be A-okay when all's said and done.
Charles, the head of the FDIC, she was very assertive when she was here, suggesting that they have plenty of cash to back up any kind of bank failure, at least the kinds that they were expecting. Are they underestimating the degree to which our banking system's in trouble?
I don't think they are. I mean, really, she has been steadfast for a very long time, and despite the fact that, these investment banks have lost all credibility because, in part, that I think initially they were sort of BSing the public, and then later on they couldn't figure it out themselves. So, yeah, there is a situation there, but let's not...
But Terry's suggesting the city is now BSing the country in terms of what it has and what it doesn't.
But I don't think Citi is going to go under. Now, listen, doesn't mean that these guys aren't going to pay a heavy price. Now, we've already seen over 200 mortgage lenders go out of business, and that was the epicenter of this whole thing. But as far as these larger banks are concerned, I think we're going to be okay. But again, they're going to be fractured.
She should be ashamed to even show her face. I mean, where was
Sheila Baird.
Where was Sheila Baird when all these banks were writing these CDO squares and cubed and square roots of
even if Citigroup
take away the
even if Citigroup doesn't go bankrupt, shareholders in America who own the common stock are still going to be practically wiped out based on these sweetheart deals that they're cutting to, like the Abu Dhabi, a sovereign wealth fund. These guys are getting these fat coupons on their preferred shares. It doesn't matter to them what happens to the common.
If people bought Citibank the same time that the Saudi prince invested in it in 1991, they would have made a fortune.
Yeah,
any investor watching the show can join in. If they want to buy the stock,
Charles, listen, the Americans are buying the common. Right now, these guys are buying preferred.
Let me bring it back, Nicole Ridgway, let me bring it back to the original subject matter, and that is your money that's in some of these banks safe? I want to say something nice about Sheila Baird here. She was among the first to really start to say, you guys got to watch out about these subprime loans, and there's going to be a serious problem down the road. But now that we're here, should people be moving their money out, since you're there with smart money, should people be moving their money into things like municipal bonds and things like that are just a little bit more safe, where the FDIC, you don't have to worry about whether they can cover you?
Well, the problem with the municipal bonds is because of the ratings on the bond insurers, there is some question about whether or not they're going to actually be able to get those great rates with those AAA ratings. So the muni bonds may not be the best place to go, but, keeping it in safe investments, the money markets are not going to give the great returns, but, they will be safe enough in them.
Well, Gary Kay, your excellent piece questioning whether Citi is as cheap as some people say it is right now. Do you think that folks who are invested in Citi are going to lose everything?
No, but I think it's definitely going into the teens and maybe into single digits. That has happened before. You got to remember something. Markets trade based on earnings. There is a clear lack of earnings and a ton of losses out there, and I think there is more to come. And when you get into a bear market for a sector, which we are in for financials, I got to tell you, low is never low enough, and usually they take it to as far as it can.
By the way,
so I think there's more to go.
I just want to make sure I heard you right. You said single digits for Citi is a possibility?
Sure. Look, the stock was 55. Did you ever think it was going down to 22?
It's half the number it was a year ago. It's true. 120 billion in market cap it's lost.
Just remember, there are no safe investments in the United States anymore.
Oh, come on,
no. If the dollar is going down, there's no safety in a money market.
Then
if the dollar is losing
here?
value,
why?
Because I'm trying to help. And I got there it is. But I don't keep my money here. I can still live here, but keep my money out of the dollar.
Okay.
That way I'm not suffering like everybody else.
All right, the Good Samaritan Peter Schiff. Thanks very much. Well, that's hard to keep my straight face. Are banks to blame for that?
Political pundits, well, what business interests stand to gain if Hillary Clinton and Barack Obama end up campaigning and making promises in states such as Pennsylvania, Mississippi, and maybe even the territory of Puerto Rico? Our Fox panel is back now to talk about it. Charles Payne, you just heard Steve talking about how they tailor their message, but as these states are waiting, and we're waiting to see what happens. What's your prediction?
Well, first of all, I want to say they're not the only ones who changed. In the green room, Peter told me to buy dollars.
No, he didn't. Never.
Listen,
I need someone to take mine.
The bottom line is that there's going to be a little bit of changing from state to state, but at the end of the day, we do know that the Democrats pose a real serious threat to big business right now, and I'm really concerned with the rhetoric because it is pandering more and more to this populism. They're going after the Edwards voters, and you have to be really worried if you're on Wall Street, and I think even if you're an American worker, because there's no such thing as breaking down capitalism and not hurting it. It trickles down and it hurts everybody.
I'm so glad you brought up Wall Street. We have a list of people from Wall Street who are supporting both Hillary and Obama, and this includes a ton of people from Goldman Sachs. In fact, the biggest part of the people who donate from Goldman Sachs are going to Hillary Clinton. John Mack of Morgan Stanley. Buffett, of course, supports both Obama and Hillary. If guys like that are not worried, then Terry, why should we be?
Well, because they're going to raise taxes on the rest of us and not on the LBO funds and the big hedge funds, and they're going to be able to continue at this lower rate, and all the rest of us are going to have to pay higher taxes. That's why we should be concerned. In addition, this talk about NAFTA is absolutely ridiculous. We would be in a contraction. The economy would be in a contraction if it weren't for exports. Exports rose 4.8% last quarter. That's the only thing that's kept our economy above water. And these two candidates are running around talking about putting in trade restrictions.
Well, Gary Kaltbaum, as the candidates run around saying those things, their economic advisors are apparently going behind closed doors, talking to places like Canada and Mexico, saying, look, don't believe it, because once they become president, they're going to play the game. They're going to be in favor of NAFTA and all of the other trade agreements.
Look, you're 100% right. I'm actually happy about what we're finding out about Barack Obama. Maybe he's not so anti-trade after all. And this, if you think about it, Hillary Clinton never started talking about, she just started talking about NAFTA a couple of months ago as we got to this point. So I think the rhetoric is a little bit loud for their side of the party to win votes. And once they get into the presidency, they realize that everything has to start coming towards the middle or nothing will get done.
Peter, let me show you who's supporting Barack Obama, and then we'll get to John McCain. Oprah Winfrey, of course, we know that, but Penny Pritzker of the Pritzker family, of course, of the Hyatt hotel chain. These are billionaires who support him.
But that Pritzker family is very divided, by the way. Some of them are for Republicans, some are for Democrats.
Well, certainly a lot of it has to do with appearances. You know, unfortunately, the rhetoric of the Democrats or of socialism is, you know, it makes it, if you support it, it looks like you care about people. And when you support freedom or capitalism, you don't care about the little guys, you just care about profit. And, you know, the difference is, of course, is, you know, it's capitalism and free markets that do more to help poor people than government handouts. But at least it makes you appear better connected when you support people that espouse these policies.
Put a nice button on that. Thank you very much. We have a hard break. Did the appraisal...
They thought it was.
Terry, at a time like this, do you just continue the dollar cost averaging and just stay in the market and not get panicked?
Well, that's what people like Warren Buffett say to do. You know, in a falling market, that might not be the best thing, but you know, if you're a long-term investor, it's the safe way to play. I think this market, though, is very dangerous. I mean, you have financial stocks falling like knives day after day after day. So you have to be cautious.
On the other hand, there are some folks out there would call screaming buys. The old adage was, if Intel goes below 20, you buy. Apparently, a lot of people did, because it's trading just below 20 now. Before it was closer to 19, and a lot of people went in to buy at the last minute.
Yeah, you know what? Before I came here, I wrote my afternoon update. If we closed less than 200 points down, it would be a moral victory. So right now, I'm ready to break out the confetti. But you know what? Just because financials are doing poorly doesn't mean that the companies that sell meat are doing poorly. You know what? A lot of folks have to look at this market. I always look at the market individual stocks. I'd never look at it as a broad market. With saying that, we're at a 2-decade low in terms of valuation. There are values out there, and you know what? If I had a 401k and I could afford it, I would double up on the amount I put into my stock market right now.
Oh, now Gary Kaltbaum doesn't exactly feel that way, particularly when it comes to Citi, where you say this thing's going down into the teens. But do you see some buys out there right now, as in stocks are on sale?
Look, there are always things that can potentially buy, but I have to make a very important point here. With all these reversals we've been seeing on a daily basis, with all the rumors we're hearing, with the Fed going from 5.25% to 3% and going lower, with all the bailouts we've been hearing about, guess what? The markets are at about closing lows for this bear cycle. So it has been very tough, and I'm just not so sure the end is near. I think there may be more pain to go. And very important, sometimes just protect capital. Don't try to do too much. There'll be better days ahead, but we ought to get past this.
Well, and to quote from Gary's own newsletter, the economy is spinning lower and inflation is spinning higher, Peter Schiff.
Of course. And you got to remember, most stocks are still expensive. And look at the trend. You know, the NASDAQ is down better than 20% in the last 4 months. And if you price it in gold, it's down almost 40%, twice as much.
And we're not where we were in 1999.
And so there's no reason to try to be a hero here. The market's going lower, but more importantly, the dollar's going lower. So you really got to be defensive.
If you tried to dollar cost average in Intel, it was at 80 in 1999. So you'd have a lot of Intel, but it's only worth a quarter of what you were paying for it on the way down.
And you didn't get much in the way of dividends while you were waiting.
Exactly.
And I just want to say something about technology, because we were talking about that. You got to be very careful that Intel's doing a little bit better today. The semiconductor index is already down 40% in the last 6 months, so maybe a lot of this has been discounted, but that doesn't mean things are going to get better and things are going to turn up. There's still some serious issues out there in technology land.
Well, it's true, Gary, but again, if you talk about selling millions and millions of iPods and iPhones, and you have Apple stock up over 2% today, I mean, there are some real products being sold out there that lead to market share.
Oh, absolutely. But look, Apple for me is an exception to rule. This is just an unbelievable company with amazing products. But on the whole, if you look at the charts of all the semiconductors and most stocks in technology, they do look like a horror show. But Apple is different.
Okay, we're less than a minute away from the closing bell. Charles, the NASDAQ composite turning positive, erasing as much as 37 points in losses. That's going to be the headline, I think, tomorrow.
That will be a headline. We'll share space with all the normal bad news. But listen, the fact of the matter is we're just marking time until Friday with the employment data, and this market really is poised to go in either direction big time. But there's a lot of money on the sidelines that will love an excuse to come in and buy this market up.
Yeah, if we see huge losses in job creation for the month of February, Katie barred the door, I think.
The headline today is Peter Schiff is just trying to help.
There you go.
That's all I've been doing.
All right. We're going to leave it at that as they're applauding on the streets. They're applauding a negative figure, but part of the reason they're applauding is because it was so much further negative before. It was down 200 points. It came back to close down about 40 points.
And gold getting hammered today. Sorry, Peter, down about $18. He can't win every day, can he? But he wins a lot. So what we have here is lower crude oil, lower gold, and a lower market, except for that NASDAQ. And the trading day comes to a close, but the business day continues. Here's the financial news you need to know today. We're going to bring in the Bulls and Bears here. What role, if any, does government have in helping reduce foreclosures?
Let's ask our Bulls and Bears panel. Gary B. Smith, Toby Smith, Pat Dorsey, and Peter Schiff has agreed to stay with us very kindly. Thanks to all of you. Toby, first to you. What did you think of what Bernanke had to say today?
Well, I was sort of amazed that the head of the Federal Reserve would sit in front of a television camera and say, you better get ready for more bank failures, you better get ready for more foreclosures, and frankly, the real answer on our problem is for what's known as a cram down. In other words, taking equity off of the mortgages, reducing, giving a kickback to the owner of the home to take his equity lower, otherwise he's going to walk away. That was about the gloomiest thing I've ever heard from a Federal Reserve chairman. He actually, I think, delivered probably some reality, but I don't think it was his place to get out there and be that way. He should have been saying that behind the camera, not in front of the camera.
Yeah, I'm sure the bankers in the audience were absolutely thrilled by that, Gary.
There was a lot of squirming.
Honesty.
But let's talk a little bit about solutions. And nobody wants to have thousands and thousands, hundreds of thousands of foreclosures and banks holding property that's empty and squatters moving it. I mean, you can't even imagine how bad the scenarios could be. But what do you think, from your brainiac mind, Gary B., is really the solution that would work here?
Now, you said Gary B. and then you said Brainiac Mind, so I got kind of lost on the translation there.
I'm confused by that too, Liz.
Well, yeah, I figured Toby would chime in, Mr. Win-Win over there. But I'll tell you what, Liz. One part that you said, we can't imagine the numbers and things like that. For me, that's the crux of the problem. No one has exactly said with any kind of accuracy how much damage this is going to be done on the economy. Yes, I mean, if you want to look at the individuals, that are going through this, we can find a lot of cases, not just in housing, but in healthcare and everyone, where an individual is personally aggrieved. Does that mean the government needs to step in? In my mind, this was always a contract between lender and lendee that that, good or bad, has to be worked out. So I can't find the case. No one's made the case to me yet with hard numbers why the government should be involved in this.
And Pat Dorsey, of all the things that the government should be involved in, lowering the principal of the house, I mean, that is so much further than just helping out those in foreclosure with their interest rates.
Yeah, rewriting contract terms doesn't sound like a great precedent to set to me. Just call me crazy on that front. And I agree with Toby that this cram down idea is what Bernanke should not have been saying, though, delivering a dose of reality to Congress and saying there are going to be more bank failures, there are going to be more foreclosures. Folks, that's just what's going to happen when people bought houses at too high prices and when lenders made bad decisions. Because to your former guest's point, sort of what was the cause of all this? The cause was really simple. Bad underwriting. I mean, at the end of the day, that's all it was, is people making loans to borrowers who couldn't repay them.
Okay, we get that.
And whenever that happens,
we get that, Peter Schiff, and I know how you feel about it, but put your brain cells to work here and tell us what a better solution, if it's inevitable that the government get involved. What's the solution?
I mean, the only solution, if there is one, is dramatically lower home prices. I mean, the underlying problem here is that people pay too much for houses. Other people borrow too much money against the inflated value of their houses. So you have all these mortgages out there, but no collateral, insufficient collateral. So real estate prices have to go down, but nobody wants to admit that. No one wants to swallow that pill because you've got millions of homeowners living in a fantasy that they've got home equity that's not really there.
All right. Well, as Washington debates... All right. Well, Clinton or Obama, who is Wall Street's favorite on the Democratic side?
Let's turn that to our Bulls and Bears panel, and we also welcome back Nicole Ridgway of smartmoney.com. All right, Obama's side here. Who likes him?
I think there's a lot of bankers that like them, but more money is definitely going towards Hillary as far as Wall Street's concerned.
Peter, Obama's people did the best they could to try to encourage investors and even foreigners that, in fact, his rhetoric on the campaign trail is very different from his what will be a pro-business stance if he becomes president.
Yeah, I don't
is Wall Street buying?
I don't think there's that much difference between the two of them, but I do know that Hillary has a history of supporting the carried interest, and there's a lot of interest in preserving that. Well, some of the real big guys in the hedge fund industry and private equity, they earn their income through a carried interest in their partnerships, which gives them capital gains treatment on what would normally be ordinary income if everybody else earned it.
Yeah, they pay 15% as opposed to 38%.
And no FICA, which is huge. And I know that Hillary has supported that. I don't really know where Barack stands on it. He's probably not in favor of it. So.
Tobin Smith, a lot of the guys over at Goldman Sachs seem to be pouring money into Hillary's campaign and not Obama's. Why do you think that is?
Well, to Peter's point, the carried interest is a big deal to very specific parts of Wall Street. But, frankly, what they're trying to do is get as much money in her pocket as possible so that if she became president or Obama became president, they've got a calling card. I've been in Washington, I think, about 15 years now. The one thing I know is you got to follow the money trail. He who gave the most money to the winning candidate gains access. And access is going to be key if there's a new regime. That's why they give them the money. They're not giving the money, to look good or to follow their philosophical desires. Trust me, it's all about access.
And Gary B., isn't that the point that everybody is hedging their bets right now? They're giving money to Republicans, to Hillary, to Obama. You can't really find who Wall Street is in favor of, right?
Yeah, exactly. It's the old, keep your friends close, your enemies closer. In this case, boy, I don't, you say who does Wall Street want? It's a kind of a toss-up between Lenin and Stalin and then these two. I'll tell you what, Barack Obama, he is absolutely no friend of business. I mean, I have not seen a big government, federal government, forget it. He don't even like state and local governments. He likes a federal government for just about everything. And, whether it's, the living wage, whether it's mandatory health care, no matter the size of the business, boy, he'd really put a crimp in things. I think the advantage Hillary has is she's probably been around just a little bit longer as probably a little bit more savvy politician, and after all that has realized, you got to really kind of walk the line on some of these issues.
Pat Dorsey, it's a funny line what Gary B. Smith says. I don't know the difference between these two, a communist, socialist, but John Mack of Morgan Stanley doesn't seem to feel that way about Hillary Clinton, nor does Chaim Saban, the CEO of Saban Capital Group. I mean, there's some big money names like Stephen Ratner supporting her. On the Obama side, fewer, though, and, some big Hollywood people like David Geffen, Jeffrey Katzenberg, but a couple CEOs in there, too, supporting these people.
Yeah, I think the single biggest difference between the two is simply track record. She has one, he doesn't. So with her, you can go to that track record and say, it really hasn't been radically anti-business. And you can say, okay, I can have some confidence that would carry through to the presidency. With him, it's much more of an unknown. And I think that's probably why you're seeing a bit less Wall Street interest coming in there, because he's more of a wild card. Maybe that rhetoric gets translated into policy. Maybe he moderates. You don't know. Whereas her, you have a voting track record you can look at.
Well, Peter, if things are going to get as bad as you say they are, and you say we're only in the first inning of a long 9-inning game in terms of things going south, the next president is going to have to do, or is going to feel compelled to do, quite a bit. So we really should focus on these promises made on the campaign trail, because things might get bad enough so that radical changes are put into play.
I mean, one of the best things about politicians is they rarely keep their promises, and the promises normally do more harm than good. But, Hillary is still a New York senator. And even if she loses, the people in New York still deal with her. And I think that's another reason why she's popular on Wall Street, is because she's already here. And she's already in New York, and people need that access, even if she's not in the White House.
Tobin, last word here?
Well, if things get as bad as what Peter says, the president's job is going to just be turning out the last light. So I'm not, I'm not quite that worried about it Peter is. What I am worried about is Obama leading a candidate, like, remember John Kerry, I have a plan. And his plan is basically to tax the hell out of people, and that scares me.
All right, last word from Mr. Toby Smith, but he'll get the first word probably next. Coming up, President Bush wants...